Mayuresh, Joshi, come in here. Thanks so much for joining in. Constant currency growth 1%, revenue growth on dollar terms hardly anything, 0.01 or thereabout, and in rupee terms is actually contracted. While there is a bottom line and a margin surprise on the positive side, Mayuresh, is the top line disappointment, will that weigh on the stock tomorrow?
Evening, yes, probably yes, because I think the stock has disappointed in terms of how the top line was expected to grow. And even though one expects the demand environment, specifically in terms of either postponement of a few deals that they had hinted and indicated a few weeks ago to hit their top line, I think this has been far worse than what the street was probably expecting at this point of time. So even the constant currency growth is lesser than most consensus estimates on the street, and so is the dollar revenue growth. The dollar revenue has hardly grown, as you rightly pointed out. What has happened to the bottom line needs to be seen carefully line by line, but largely I think the top line growth has been disappointing for TCS.
Yeah, you know, this is the largest IT company. It sets the benchmark for the space, so to say, and I think this quarter isn't the best. Now, Urmil Shah is also with us. Sunita Nagpal from our desk is also with us. Sunita, let me first come to you. I have the broad brush numbers, but anything that you've picked out which you specifically would want to point out? Okay, I think we just getting that audio correct. Sunita, just stay on. I am not getting your audio. Maybe I should go across to Urmil for his initial thoughts. Urmil, your take. Great bottom line number, exceptional bottom line number. Margins have sprung a surprise, but the revenue number isn't the best. How would your first take on the results?
So my first take on the result is clearly a miss because this generally is seasonally a very strong quarter. We weren't expecting it to be as strong as in the previous years, but a 1% constant currency growth on a Q-on-Q basis is definitely a big miss. More importantly, because the second half in this year is not gonna be a normal second half with seasonal weakness. We are yet to see the full impact of Brexit on the IT spend, and plus you will also have the US election, which is an important monitorable. So the exit rate in this quarter definitely puts a pressure for the growth for the full year.
Okay, I think now Sunita is with us, and then we'll get to Ravi for his thought as well. But Sunita, to you first, anything else that you've picked out that we're missing on right now?
Other than the revenue, which has been clear disappointment, this is the slowest growth I think in many years that we've seen in quarter 2, which is seasonally a strong quarter. Other than that, digital continues to do well for the company. The contribution from digital is 16.1 versus 15.9% in the previous quarter. So we have been seeing growth, and if you remember the recent commentary from the management in their interactions with the analysts, they have said that although the macro environment is uncertain right now as far as US BFSI space is concerned, but they are very bullish that the digital is the way and digital is going to drive growth going forward. So looks like that seems to be panning out, but we'll have to watch out for the commentary from the management whether this sluggishness is likely to last in the second half of the year. Remember when they talked about FY17 being not great year, they talked about FY16 exit rate being poor. So if FY17 or exit rate also is likely to be poor, we might see this going into the next year, because remember most of the analysts believe that FY18 will be much better for TCS.
Okay, thanks for that, Sunita, and I'm sure you will have more points to make as well. Rahul Jain is also with us, but Ravi Menon, to you, does this put a big question mark on what TCS can do for the year as a whole? I think Urmil was making an important point that the second half is laced with uncertainties, US, UK and a few other places. So does this put a big question on what the biggest Indian IT exporter can do in the year, when NASSCOM has said that the companies by and large will probably do just about double-digit growth?
So I just took a look at the fact sheet and the breakup to see what's really caused the drag on revenue, and it seems like it's mostly from India. So the core geographies have actually not done too badly. So North America has done about 1.4%, and Europe 3.7%. It's India that's down 7.6%. So I don't think people will really be too worried about this particular quarter's slow growth. I think that people will take the margin surprise as a positive, and considering that the declines happened in India, take that as a one-off.
Okay, so this is of course the verdict for TCS. Remember, and I'll just scratch that point a bit further with Ravi as well as Urmil, and Rahul Jain also would be joining in. But this is the earnings verdict that we have for TCS. Keep in mind it's a mixed quarter, and which is why the yellow on the screen. They've given a positive surprise on the numbers, on the bottom line and the margins, but the revenue has been a miss. So Ravi, we have to let you go, but before that, very quickly, what is your verdict then? Do you believe that tomorrow you would be telling your clients to go out and buy if there is a bit of a disappointment on the TCS stock price?
I think I might actually.
Okay.
Because it depends on the commentary about the outlook. But yeah, if I would say that the commentary is not negative, I would actually say that this is an opportunity, if there is a dip, to buy into it.
Rahul Jain of Systematics with us. Rahul, what is your thought on this? Because I was of the opinion that the revenue miss is difficult to digest, considering this is the slowest Q2 that TCS has had in a really long time, as Sunita was saying. Ravi Menon believes that they've done well in the key geographies, and the market would probably instead look at the bottom line positive surprise that has come in. Where are you on this argument?
Yes, so actually TCS is our preferred bet, which has been kind of a little different from the street, but we always believe in the broad-based growth which TCS done. Even if you see this quarter, the disappointment has come in from very small fraction. From geography, it is Latin America, which has been challenged for some time, India, which nobody cares about much in terms of the growth. If you see from a service perspective, it is the product business which is volatile in nature. So I think it's okay. Yes, it's a second quarter is seen as a good quarter and is one of the slowest one. But yes, that's the case for this year itself. This year we are going to see one of the slowest growth for the industry in general. So obviously there would be a slower 2Q, a slower 3Q. That is a possibility. But I would say this number is little lower on the revenue front on my estimate, but on profit, yes, it has given an upside, and I think given the valuation which it is trading right now, it looks to be a good buy for me.
Okay, so goodbye for two of our experts, and Ravi, we'll let you go, of course, on that note. Thanks so much for being with us. Now, to Urmil and Mayuresh, both of you, my second question is, we just read out what Chandra had to say, and he's saying that the environment is causing a lot of customers to go slow on their decisions. Mayuresh, the big question is, while Ravi and Rahul are saying that it is their top idea and they look at the bottom line number, does TCS, by virtue of what they've done in the first 2 quarters and the fact that the second half is a bit uncertain, will TCS be able to reach what the NASSCOM believes an average IT company will do in this year on the revenue front?
And that's what I mentioned, Neeraj, that the headwinds are there specifically in terms of how discretionary spending will pan out. And looking at how Brexit will evolve over the next few quarters, that will always remain a patchy situation for top-tier IT companies. Having said that, probably I think what you've probably seen in terms of numbers, one really needs to understand, as I mentioned earlier, a line-by-line synopsis of how the bottom line has been arrived at. And if the management commentary is hinting that post a few quarters and traditionally second half is weak, beyond that they are seeing some amount of traction happening on all counts, whether that be their service lines or their various geographies. I think that is something that the market will take some relief out of. So my own sense is that everything now points out how the management commentary is. If the management commentary appears or sounds a little bit sluggish in terms of how revenues are expected to pan out, you might have some downgrades, in my opinion, at least in terms of the earnings specifically for FY18. So largely, I think I will be waiting for management commentary in great detail, hearing bit by bit every word that Chandra has to say, and then probably we take a call into this.
Yeah, I think what he says and how he says, the body language would be important as well this time around. And remember, Chandra will be speaking live first to ET now this evening, so that is something that viewers can tune in as well. Now, Urmil, that your first comment was a miss. You've just heard a couple of other arguments as well. Is the margin surprise and thereby maybe the bottom line uptake? I haven't gone into the details. Maybe there are other factors contributing to the bottom line. But let's for a moment assume that the margin uptick has given a little bit of a leeway to TCS to up its bottom line. Is that good enough to make up for the disappointment on the revenue front for this quarter? I'm not talking about the next 2 quarters. Let's assume his commentary is all okay. Will this delivery disappoint you, or will you be okay with it?
So for this quarter, on the we believe that revenue growth is what is the main factor for the sector as a whole in this particular year. There is absolutely no doubt that TCS has the best track record as regards managing the margins. So they have been doing the best job amongst the large caps. So margin performance is definitely better than expected. But even if the decline is mainly driven by India in this quarter, I would say that 1 percentage point growth in CC terms is a miss for us.
We were expecting 2.5 and they've come in at 1, which I don't know is a disappointment. Now Sunita probably tracks TCS for longer than any of us out here. Sunita, to your mind, how do you think the street reads into these numbers? Because there is clear cut revenue disappointment. Does this, Sunita, the same question to you, does this also put a question mark on their ability to be able to meet the NASSCOM guidance as for an average IT company for this fiscal?
Absolutely, the revenue growth is much lower than expectation, so it clearly puts the pressure for them to do better in the second half. But having said that, margins was another thing that markets were focused very much, especially that their guidance of 26 to 28%. So for this quarter, they have been able to meet the 26%, although Q1 it was lower than this thing. So there is a possibility that they will be able to defend this guidance range of 26 to 28% in the medium term. Most of the analysts were going with that for FY17. This will be missed. So that is clearly a better performance on the margin front. Net profit also, we were expecting a very flattish kind of net profit. They have done better. They grown at 4%. So that has also come as a positive surprise. Of course, there is a disappointment, but having said that, as you heard various analysts talking about it, and they said that it's coming from geographies like India and Latin America, which has been in past also have been unpredictable markets. So these are the two markets which are not that material. If you look at the Europe has been flattish in this quarter. Previous quarter we have seen Europe done very well for them. So because of the Brexit uncertainty, maybe there are discretionary spend being held. So that's what is playing out as far as BFSI space is concerned. They had said that it will be sluggish, and that's exactly how it panned out. But if we have to hear the management commentary, the comments that the company has given in the press release, they are talking about this is an unusual Q2, and if they say that in the coming quarters they are expecting demand to come back, or the bunching of demand post event like a US president election, so we can see some improvement and stock opening higher tomorrow, because there is a positive element in the numbers, although there is a disappointment on the top line front.
Okay, so the EBIT, not the EBITDA, but the EBIT margins are at 26. The EBIT is at 7617 versus 7347, not the EBITDA, but the EBIT numbers are therefore, I think by and large in line with estimates, the EBIT numbers. The EBIT margin though, of course, by virtue of the fact that the top line hasn't grown as much, is now at 26%, and Sunita is right, there is a positive element on that front. Now, having said that, Rahul, my question to you is this. TCS standalone, assuming that you go with the assumption that the profit number is good and therefore it's a great stock to look at, let's compare it with the others, right? Infosys has had a bit of a devaluation, and I mean, forget the last couple of days when it is rallied in anticipation of maybe a positive surprise coming in tomorrow. It is HCL Tech which is saying that they will easily match the 12% number, probably better it as well. What would the pecking order be? Would TCS still be the preferred bet, or looking at this quarter's delivery on the revenue front, you will probably move the pecking order up and down a bit?
Yeah, I think given that growth rate has come off in the sector, and the growth differential between the best performing company, the top two, top three, there is a very micro difference between barely gap of 200-300 bips, and there is a margin movement up or down in the respective stock. So I think to look one result in isolation becomes little difficult to decide the pecking order, and there is cases of some surprises that may come. Today we saw Cyient earnings did pretty well, much better than most of the expectations. So there are element of surprise or disappointment that can come given the volatility in the environment, and so we would look into all the earnings before decided pecking order. But yes, so far we are okay with the TCS number, and ensure that it remains one of our preferred bet for sure.
Okay, fair call. And that's probably a safe call as well to make. Now, Mayuresh and Urmil, that's my question to you guys as well. Mayuresh, where are you when it comes to the IT pecking order? I know one swallow doesn't make a summer, but the point being, right now we've gotten the first of the numbers, which is TCS. So there is Infosys slated to come out tomorrow. We can safely bet that HCL Tech will not have too many issues, because they've delivered such a splendid quarter one that they need to do precious little in the next few quarters in order to make up that number that they've guided to. Where are you on the pecking order, and why?
Again, I think the long-term story is very, very compelling for the top-tier IT names, Infosys, HCL Tech included. And again, I think the kind of expectations that one really has for the better part of this year is extremely subdued for all top-tier IT companies. So largely, I think it is going to be a performance beyond FY17. And the last two quarters, Neeraj, is going to actually throw out, if Brexit does throw out surprises coming out in terms of spending cuts coming from the client side. And if that happens, I think the entire equation changes in terms of the EPSs for most of these companies for FY18. So though the near-term outlook probably is marred with macroeconomic headwinds largely getting faced by these IT companies, Infosys and HCL Tech over the longer period should deliver. TCS obviously has delivered on the EBIT and the bottom line, though I think I would love to see where that delivery has come from in greater detail. But largely, yes, I think we remain optimistic on the large cap IT names. But again, I think the view has to be at least for a couple of years, considering the macroeconomic situation that we are at this point of time.
Urmil, aside of needing to know very closely what Chandra has to say with regards to the revenue targets for the year, and whether he believes that that will come in at a nice clip, or whether there will be headwinds there, what else assumes larger significance? They've, as Sunita was saying, managed to nudge the lower end of the guidance of 26 to 28%. So that's a green tick on that front. But what else aside of the revenue numbers would you want to hear out from when it comes to the commentary coming in from Chandra?
So we would like to hear out what are the clients talking to them regarding the IT budgets and the spend for this year. And also, if you look at the digital services growth in this quarter, it's probably been the slowest in the last 4-6 quarters as well. So we would like to understand that front also. And BFSI continues to be the biggest segment for TCS, and has been an important vertical for them for the growth they have delivered in many previous years. So would also want to understand whether the kind of caution their clients are showing, it's specific only for this particular year, or even it looks uncertain beyond that. So these are the key points which we would like to get more clarity on the con call.
Okay, Rahul, the other question is this whole talk, and I think Sunita was referring to her this on before in the morning today, about how companies are, or at least in candid conversations, they are saying that automation, while may lead to margin expansion, could lead to a near-term revenue loss coming in. Are you seeing evidence of that across the space in the last couple of quarters in commentary and in delivery?
Yeah, so automation in various clients leads to revenue reduction of anywhere between 10 to 30%. Now even people talk of more automation than that. But yes, as like for any other business, the argument is to more business from the same client. So effort wise, yes, it goes down, but they end up getting more business. So far the revenue per client metric has not been hampered because of the automation, and they are able to pull more revenues from the customer, though the effort would have gone much more because of the automation thing. So far it is not threat, but yes, this may transform lot of revenues into a different category bucket, and if companies or vendors are not able to do that, they may end up losing some of the business from the client.
Urmil, coming to you, there's another threat or the concern that we have been seeing is the captives basically growing or increasing the outsourcing from the captives. How do you see that Indian IT, do you see any risk to the revenue growth from that front?
That remains one of the element which is resulting in insourcing of business. But we should also remember that all these large companies like TCS, they provide excellent cost saving opportunities for their clients, and at times deliver services at a cost which is even lower than the captive. So yes, it remains monitorable in case maybe any of the top 50 clients opting for insourcing, but I would say that large companies should be able to manage that.
Okay, my next question is to Mayuresh. Mayuresh, tomorrow Infosys will be announcing its results, and the expectation is that there will be a severe cut in guidance. What are you expecting as far as Infosys guidance is concerned? And do you think that the blip that we saw in TCS, which looks more like, because if you look at the geographies that have not performed in this quarter, looks like it will be a blip of 1 quarter or 2 quarters. How do you see that the demand environment or the demand commentary from TCS and Infosys tomorrow?
Again, I think as I've been mentioning this, the demand environment still looks a little bit on the softer side. And again, I think it remains so, at least for the next few quarters, assuming second half being traditionally weak in terms of discretionary spending cards, projects getting delayed. You've seen few projects, specifically in case of Infosys, like RBS contract actually getting cancelled. So that will have some amount of pressure, specifically in terms of Q2, along with the cross-currency headwinds that we have witnessed. So we're expecting better growth to probably come through for Infosys this time round. But lastly, again, I think the demand environment, in my opinion, will remain a little bit sluggish, and that will get reflected in commentaries. The commentaries, as I mentioned earlier, are indicating better up for the second half of this fiscal. Might have the early investments getting going.
We just got Mayuresh slightly on a patchy line. I can't quite make out, but in a bit I think Chandra will also start speaking, so probably best to go across and hear out what they have to say. Well, I think the commentary right now in the press conference and then in the live chat with Edina would be important. Let's get across.
Your quarter, as I said in my press statement, a rather